Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our commodity technical analysis update. We'll take a look at the dollar, the 10-year, 30-year yield. We'll work our way through precious metals and other commodities. As you can see, I got new lighting, so that's good. I've been playing with that. I've got a couple of other things I need to still set up, but that's why it was a little bit late today. Been trying to set this stuff up, and we'll go through it today, and I'll give you my financial opinion. So here we go. So we'll start with the dollar here. We've got the dollar. This is a relative strength indicator. And we're starting to roll over here a little bit. Now, we've got the larger selling pressure here. We've got the come on up where it contracted, where the opening and closing prices started to contract, and we're getting a little bit of selling pressure. But we're still above this really long-term support level right here. That's our long-term support level. Are we going to break out of this and move higher, or are we going to come back below and have a lower dollar? And I can't tell you at this exact moment which way this thing's going to go, or even really have an opinion. All I can say is we've got sellers up here with the wicks. We've got a kind of it's not really a bullish or bearish scenario. We're just at resistance, and we're also at support. So we need to see which way the buyers or sellers push this thing. We want a weaker dollar, as a weaker dollar will be a tailwind behind everything priced in dollars. But right now, we're right at that resistance line and support line. We're coming back towards the support line, but we need to see if we can break back down below it. We haven't broken anything in terms of trend lines or anything like that, so we're kind of in no man's land with the momentum still going up with a couple of bearish candlesticks at the top here. The 10-year yield, it's also looking very similar. We're getting some wicks at the top here, indicating that we could roll on over. We've got kind of a wedge type formation that is forming up. We haven't broken any downtrends yet, but that's kind of what I'm seeing here. There's kind of your uptrend. We haven't broken anything yet. We're kind of just moving sideways. And yields right now, momentum is definitely higher. With the 10-year yield going higher, that puts pressure on stocks to sell off. And obviously, bonds have been selling off. Looking at TLT, which is bond prices. This is a 20-year bond prices. It does look like we've getting a little bit of buying pressure. Could this be a bottom here? I wouldn't jump in front of it. I'll just put it that way. We've got lots of momentum coming down. We could start to see this round out, though. What that means is that the bond prices will slow on down depending on further data ahead of us in terms of inflation and all those other things. So right now, momentum's definitely lower, and I'm sticking with that momentum lower, where bond prices will continue lower, yields will continue higher. And then the 30-year yield is also moving higher, but we're getting a little bit of wicks at the top here. Getting a little bit of selling pressure, or I should say buying pressure in bonds is what I should say. Getting a little bit of buying pressure in bonds. We are contracting in the opening and closing price, and we could see this head lower for yields. TYX to TNX, I'll take a big picture view. Usually when you get in these areas down at the bottoms here, those are usually good spots for purchasing gold. If I were to put a gold chart up along with this, put it in a new pane, you can see between the white and blue lines where we went from low TYX-TNX ratio to a higher TYX-TNX ratio. We can see that if you buy at these lows where the white lines are at and ride it on higher, those are usually really good spots to be riding in gold. And we are at another very low level for this ratio. So looking at that ratio and kind of what this would mean is that the curve is inverting going down, uninverting as it goes back up. But we can stay low for a while. And I think that highly depends on what oil does. It seems like when oil's going higher, we get pressures of this to go lower. So that direction, which is not favorable for gold, silver, and those precious metals, monetary metals. But it looks like we're trying to get some support here on this long-term support line. If we head on higher where the curve uninverts, usually that's good for precious metals. We've got commodities definitely heading lower. This is coming with the pressure in oil, natural gas. Some of those commodities there, they are selling off some. Copper's still looking a little bit bearish, and we'll take a look at that. We've got gold. Gold is looking all right to me. We've got massive buying pressure here, and then the slow leak off of sellers that we usually see. Usually it comes all the way to the bottom here, and then we'll see where we go from there and what the yields do. Oops. So that's what we have for gold there. And you can see in a longer term perspective, we've got these little guys just walking lower month after month after month. I know that the inventories are depleting. That goes for all the precious metals. And we're back to another support level. So we'll see if we bounce here over the next week or two and what yields do. Silver's right on supports, that long-term $18.15 support level. I think that's what I have it at, somewhere in that range. And today we are still bouncing off that support line. We might do a couple of more bounces, but I like silver down here. I like the TYX TNX ratio as well. Platinum also getting that bloody nose, getting a little bit of selling pressure today. But from a long-term perspective, this looks fantastic for a potential move higher. It just needs to get some legs underneath it. We're just waiting for that, for the buyers to step in here. That's really what we're doing. We're waiting for the right market conditions. I think the market conditions are good. Just waiting for the buyers to show up. XAU to gold ratio, we are still below this massive downtrend line that we have not broken. If you zoom in on it, we're just moving sideways at this time. So SILJ just moving sideways above support. That support line is a long-term support line through here that we've used before. And then GDX is also slightly higher today, but mainly just moving sideways. We're in a support region. Coming to crude oil. Crude oil is quite a bit lower today, but usually what happens with these is you break a downtrend. You break the downtrend, that's step one. Step two is to create a higher low. Our low is here. We're going to probably create a low somewhere in here. And then we want to see us break upward above about $92, $93 for a new high. That would be in a new uptrend. And that's what we're looking for. Right now, we do get a little bit of a wick at the bottom, some buying pressure coming in towards the end of the day. Is this a reversal candlestick? Let's wait and find that out. If we take a look at the 5-day, we still haven't broken this downtrend line yet. But we're still trending lower, and we'll have to, we're either going to roll over a little bit more. We've got support in the, down in the $80 range, 75 if we get that low, so $75 to $80. And that's what it looks like right now. Natural gas, still feeling the pressure. I don't think there's anything underneath this to support it in the short term. Freeport is still down late November. We were looking for a pullback in natural gas in the fall. It's between the heating and cooling seasons. And there's just nothing here to support it in the short term. So I do think that we could potentially head lower. We're in a good spot right where it's at. We're going to start finding some support in this general vicinity. It could even go all the way to $5-ish if it can muster itself down there. But it seems like the equities don't really care about the down move in oil and natural gas. So, I mean, we're right below this resistance line. We have not broken out there, and we're just cruising sideways at this time for XOP. If we take a longer-term view, we're just moving sideways up here. I do think there's a possibility that we come back if oil and natural gas continue a little bit lower. What I'm seeing in here is more of like a kind of a shoulder, maybe a head, and then like a shoulder that's developing. So it's an inverted head and shoulders where we'll eventually work our way higher. But that's XOP there. We've got OIH, which is an energy service company. or I should say energy service companies, ETF. And OIH, I think, still looks good. It's still hanging in there quite well given the price of oil and natural gas. We've got nice big buying pressure here. There's not too much selling pressure. It feels like to me that people are buying in oil stocks, and obviously they're outperforming the commodity itself by a dramatic margin. So I think people are positioning in it, and I think that we'll eventually see a good move higher there for a move on up. It's just going to take a little bit of time. We need oil and natural gas to respond there. So uranium moving on higher. That's looking fantastic on the futures pricing. This may be delayed by a day of what TradingView has. Sputt Physical Uranium Trust, we kind of zoom in there. It still looks good. There's not much selling pressure. The next thing that we want to attack is that 1850. We want to close up above 1815, that line. We're taking a run at it, and we'll see what we can do if we can break it. Uranium is also a little bit higher today. It's right at that resistance line. I just kind of quickly drew a resistance line in there. We're squeezing on up. We got a bullish engulfing here. It still looks good for a potential move higher, given that the overall markets hold up well like they have been. CCJ, we're right on support. We had that big down move from the dilution, raising of the money, but again, it's right on support, right above it, moving on higher. Looking at TAN, TAN is Invesco Solar ETF. We're still below. Looks like we're having a little bit larger pullback here. We could pull all the way back to about $49. This side will match this side over here, and it looks like it's an inverse or symmetrical mirrored object where we're just going to kind of come. Maybe we come right back down and then head on up. So that's TAN there. We've got COPX right on support. It is basically right above support. We do have a flag pattern, an inverted flag pattern that we're basically trying to base out here. But it's down today. Which direction is this thing going to go? I'm not too sure with copper, to be honest. There's a lot of mixed signals in the market in the short term with copper. So we've got selling pressure with, I would say, like recessionary pressures, selling pressure from that. And then we've got the overall markets looking a little bit better, like the S&P 500 and whatnot. So I think this is going to grind sideways for a little while. And we're right on a long-term support line. CRB to S&P 500, I do think this may head a little bit lower. To me, it looks like the S&P 500 is getting a little bit of I don't know what analogy I should use, but a little bit lighter step in when it's starting to move on up. It's starting to look a little bit better. Commodities, looking at oil, we may pull back a little bit in the short term. So I think in the short term, we could head a little bit lower. Looking at rare earths are still at support. It's that long-term support level that we're at. So that's still looking all right. Lithium is also at support. We do have some selling pressure up here. I know that the price of lithium's been doing pretty well, so we'll see if the global lithium battery ETF follows suit. The S&P 500, it's got a little bit more buying pressure here. We have a nice big bullish engulfing back there, so we'll see if that thing continues higher. And it seems like, here, let me go on the weeklies here. Doesn't look pretty, but it doesn't look horrible either. I think we might get a short-term bounce. And then we've got the NASDAQ composite just kind of moving sideways there. Slightly higher today, 0.9%. We do have a bullish engulfing that usually moves its way higher, but again, we don't know the direction of the dollar necessarily in the short term, and the 10-year yields, if they roll over and go lower, I think it's going to be a huge tailwind for these. If it continues higher, then all bets are off. I think that this is going to reverse and move on lower, depending on those yields. I don't have a horse in this game anyway for the overall markets here. EEM, we'll see which direction this goes. It's right on support, highly linked to the dollar. It's inversely correlated to the dollar. XHB, a little bit higher today. Again, depends what the dollar does and the yields. Higher yields are definitely a headwind for home builders and the whole real estate market. Lumber, slightly lower, but it still looks really good. It's broken out of its little pattern here to the upside. We've got cocoa futures down slightly. Still looks fine. We've got wheat getting a little bit of a hammer candlestick. We'll see if we can turn and reverse higher here. Soybeans moving sideways. I still say this is bearish with this large down candlestick. There's not much buying pressure in here. It doesn't look like there's anything on the buying side that's ready to rip it higher. Corn moving sideways in this channel. And we're getting a little bit of a bullish hammer candlestick. And copper heading a little bit lower today. And I do think that we could potentially head a little bit down. I don't see too much buying pressure anywhere in this side over there. Moo is moving sideways. We had this buying pressure day and selling pressure day right next to it. That complicates things in terms of the way that I read these patterns. But we do have a broken downtrend, and we are at support. So I would say we're trying to put in a bottom. We've got aluminum heading a little bit lower today. We're right at support with aluminum. We've been hanging out at this support level. We'll see which way this thing goes. Kind of confusing. If you look at it from the fundamentals, we've got over in Europe, smelters are all shutting down for aluminum. You'd think aluminum would be all right, but we also have recessionary pressures. So they're both battling each other out. And then we've got the Baltic Dry Index at that support level as well. That this is a really long-term support level that we've hit 1 billion times. And we're right there at that, and the companies look pretty good for the day. So that's what I've got for today, guys. Overall, kind of neutral on everything here. And I got to fix the lighting here. We're trying to put this in here. But I'd say it's kind of neutral. Oil's pulling back, natural gas is pulling back. As expected, it's between heating and cooling season. We've got some of the metals. They're still pulling back. They haven't broken their downtrends yet. And then the overall markets, I would say it's kind of a weird scenario. We've got everything kind of going lower. We've got yields going higher, which means bond prices are going lower. We got stocks going lower. They're up today, but they're overall kind of down. And we got commodities starting to go a little bit lower as well. So there's really not much of a safety thing. And if the dollar starts going lower, kind of a weird scenario. I guess money is coming out of the system somehow. Because usually if it's inflationary, if money's rotating around, you'll find it somewhere. So, but that's what I've got for today, guys. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. Definitely don't forget to subscribe to the website, Platinum membership. If you guys want, we've got a question and answer session coming Sunday, 5 p.m. Mountain Standard Time. If you'd like to attend, definitely sign up and ask questions, and we can go over a lot of things that you guys have questions over. All right, guys, we'll catch you next time. This is Finding Value.